Good morning. Welcome to the 2022 Upper Manhattan Real Estate Report based on 2021 data. I'm Robb here from Harlem Lofts. Welcome. We also have behind the scenes Bestar Muya, who does all of our marketing and helps us out with these reports. So thank you, Bestar. And then next to me, Gareth.
Yep, I'm the research analyst at the firm. Yep.
Awesome. Okay, so the print version of this is being produced right now by Gareth's team. Should be out next week. If you're already a subscriber, you'll get a notification. If not, subscribe now and you'll know exactly when it's released. It's going to be divided into two sections. We're going to have the townhouse market analysis first, and then we're going to go into the condominium market. Okay, so you may remember we divide our reports into zip codes. We start from the northern tip of Manhattan and go south. So we're all the way up at 10034 at the top, goes all the way down to 96th Street on the east side and 110 on the west. Okay, we choose to divide our townhouses into three segments. We have the 1 and 2 family townhouses, they're considered residential. We have the 3 and up with apartments, they're considered the investment properties. And then we have the unique SROs, which are indigenous to Harlem and some other areas like Hell's Kitchen. So as you guys know, hopefully you know, we've been doing these reports for over a decade. This particular data set, we're looking from 2018 to 2021. However, with COVID and what we went through, we want Gareth to give you some information on the hyper-focus on that area for a period of time. So Gareth, can you do
Okay,
that?
so we're going to kind of focus in here on 2019 pre-COVID, 2020 during COVID, and 2021 the recovery. So let's start. So compared to 2020, in 2021 we saw in 2020 we saw 61 fair market value townhouse transactions in Upper Manhattan versus 95 in 2021. So a nice, good recovery. So 132.9 million versus 218.9 million dollars in sales. So let's kind of dial down. In Q1 2020, we saw 23 sales, which was similar to Q1 2019, 25 sales. That was immediately pre-COVID. During COVID, Q2 to 4 2020, we saw only 38 sales, which was 39.7% below the number in Q2 to 4 2019, which was 63 sales. However, in 2021, if we look at Q2 to 4 2021 and compare to 2020 and 2019, Q2 to 4 2021, we saw 75 sales, which was a significant recovery and even overshot the values in 2019, which was 63 sales. So it's 19% higher than 2019. So it's clear that the townhouse market has recovered post-COVID-19. The question now is it going to go higher, and are we looking at a potential seller's market?
So Gareth, we talked about sales volume and then the number of sales.
Right.
How did the price in all of 2021? How did it affect pricing?
Okay. Good question, Rob. Interestingly, if we analyze price and price per square foot of fair market value sales over time from 2018 through 2021, we find that they really didn't change. The price per sale in 2020 and 2021, 2.18 million and 2.3 million, very similar to 2018 and 2019, 2.43 million and 2.2. This suggests that despite the impact of COVID on number of sales and sales volume, the underlying market remained healthy during COVID, and coming out, we haven't seen any increase in sale price yet, although the market does appear to be heading towards an uptick.
And we'll get to that in a little bit, so stay tuned.
Okay.
So Gareth, we talked about what properties, well, we talked about the prices, we talked about the sales volume, we talked about the pricing structure, but what has changed with the COVID situation and the recovery? What has changed in the type of properties that people are buying right now?
Right, Rob. Good question. So if we kind of analyze sales by property class, and Rob has outlined the residential, rental investment, the SROs, what we saw during COVID was that the 1 and 2 family residential market was impacted more heavily than the rental investment market. So 1 and 2 family residential sales, 37 in 2019, dropped to 20 in 2020, back up to 40 in 2021. In contrast, the rental investment, that's the 3+ family townhouses, 28 in 2019, 25 in 2020, 36 in 2021. They remain very stable. The residential market was hit, but now it's all the way back, and actually better than back. Yes. So we're looking at a strong residential market, currently.
And I know there's a lot of graphs, and we're talking fast because we want to keep your attention and get through this video. What we also have been following is where this activity is happening, which zip codes. If you want to find that out, go down to the description, download our reports, and you have all the charts and graphs to see where these properties are actually being sold. All right, so here's what I'm hearing. In 2020, we had 65 sales for the whole year in Harlem, Upper Manhattan, townhouses. In 2021, we've now closed out with 95. Mm-hmm. That is a normal market. That is a normal market. So with the number of sales going to normal capacity, 95, and now the listings, have we talked about how many listings are currently on the market?
Good point. Okay, so this is where we've been, and where we are, and where we're going is actually very, very interesting. I mean, following a market downturn, inventory is the first marker of a recovery, which is followed by sales. So after COVID, townhouse listings peaked at 91 as of November 2020. Now dropping down to 58, which is the lowest since the beginning of 2020, pre-COVID. In the light of the increased competition with the 91 listings, sellers began to offer discounts. By February 2021, 59% of listings were discounted, and that's also now dropped to approximately 38. So inventory went up, discounts went up, and the buyers followed that. So the number of in-contract listings has subsequently increased, peaking at 29 in November 2021, and now 26 as of January 2022. So inventory went up, discounts went up, sales went up, and now inventory is dropping. Prices have stabilized, and we're looking at a potential switch from a buyer's market to a seller's market.
Well, it doesn't take a brain surgeon to realize with 58 properties on the market and 26 in contract,
right?
The difference that I'm seeing is normally you don't have 26 in contract. And recently what's happened is banks are requiring double appraisals. They're requiring double surveys. A lot more time is elapsing between contract and closing. So this inventory that's roughly around 100 is normal is down to 58. A lot of them are locked up in contract, but that's still a very small amount that is on the market. So one of two things is happening. Either the brokers are holding them off of the market until late February or March, which could be the case. Mm-hmm. And it's a good thing that they probably are. We have a few that we're not launching until March 1st because of Omicron and the problems with open houses right now. So even if 10 or 15 properties launch March 1st, we're still going to have tight inventory, right? And it's still going to be a seller's market in March and April based on the data that we have and predictions from doing this for the last 15 years.
Right.
Would you agree?
Yes, absolutely. Yeah. Yes.
All right. So Gareth, I'm going to have you dig a little deeper and talk about, break this down into the different market sectors and pricing. Can you do that?
Absolutely.
Right.
Yes, very interesting. So if we analyze listings, in contract listings and sales by price, we divide them less than 2 million, 2 to 3 million, 3 to 4, and over 4. We can see that the lower end of the market, like below 3 million, is pretty dominant currently. Of the 58 listings currently on the market, 43 are priced below $3 million. The in-contract, of the 26 in-contract listings, 22 are priced below 3. And of the 95 sales in 2021, of the fair market value sales, 81 sold below 3 million. This clearly shows us that the lower end of the market is dominating currently.
On our monthly report, which comes out every month, that's why it's called the monthly report, my personal prediction now, and we're going out on limbs and making predictions these days, and if you look at these old videos, we've been pretty much on track. This one's a little riskier, but I keep saying that the $3 million, especially the 3 to 4, and the 4 and up, mostly the 3 to 4, is going to return in March and April of 2022. You're going to see a lot more inventory and a lot more sales between definitely 3 and 4 million. So this chart that you've been seeing lopsided for so long is going to level out. Maybe I'm right, maybe I'm wrong. We'll know by June 1st.
We will.
All right, so 2021, clearly 2021 is a year of recovery for the townhouse market.
Absolutely.
I can tell you that this firm has closed a large percentage of the properties that we've talked about. But Gareth, all the details and tell us about the details.
So we've seen a full recovery in sales. The market is normal. We've got a record number of properties in contract. Prices have stabilized. Inventory is at a 3-year low. That's all looking good for the market. So Rob, I mean, how does all of this data help your sales team?
I can tell you this. I'm a licensed contractor, been doing this for 25 years. This guy's got a couple of PhDs from Cambridge in research. But when it comes to closing a deal and selling a townhouse, there is no question that can possibly be asked that we don't know the answer to. And that is the difference in using a firm that understands this market to the nth degree rather than someone who doesn't. And this information and this research has taken this firm to a completely new level and allowed us to close a record number of townhouses in 2021. Let us help you in 2022. And that's all great information on townhouses, but let's talk about condos for a second.
Absolutely.
All right, so condominium sales. Now, we've been telling you in our monthly and quarterly videos and reports, the condo market returned long ago. 2021 was a stellar year.
Absolutely.
Can you give us some details on some of these record numbers that we've seen in condo sales?
Absolutely, Rob. So following the downturn in 2020, the inventory came back and overshot. It reached a maximum of 444 condos on the market. This has translated into a very large number of sales. So in 2021, we've seen a total of 378 transactions, 378 fair market value sales. That's 171% of what we saw in 2020. That's an enormous kind of increase. So quarter 2 and 3 2020, we saw only 75 sales, which was 51.6% below 2019, which was 155 sales. But the recovery in 2021, quarter 2 and quarter 3 2021, we saw 227 sales, which is 146.5% of what we saw in 2019, as in pre-COVID. So the market is back. The market is hot, looking very good.
I'd like to add this. Obviously, we think that Harlem is the best place to live. This is where we live. That what has changed, I think the new developers have been developing properties in Harlem, condominiums with outside space, private, both common, private, backyards. That is the difference, and I think that is the separation of the condos you find in other places downtown versus Harlem. So the outside space is obviously a big attraction here. Every condominium has it now in Harlem.
Right.
The developers kind of were ahead of the curve, and they did that, and this COVID problem actually helped out. So if you want to list your condo, if you want to sell them, our firm has created condominiums out of townhouses. We've gone through the whole process. We understand Schedule A. We understand Schedule B. We understand tax implications. We're good at condominiums. So
yes,
consider us if you're going to buy or sell a condominium. So to make it brief, keep the video brief. Gareth, you did a lot of work. We created a chart. I'd like to show it up on the screen. All of this detail can be found in the description below. You can get links and you can get all the detail. But look at the gray. That is 2021. That's where you want to focus. If you have any questions, put it in the comments below, and we will go in here once or twice a week and we'll answer your questions so that you can get the answers and everyone else. But focus on the gray and the writings on the wall there. So we're going to throw some charts that Gareth put together up on the screen now. Thank you for these. You can see the condo activity is what, 2.6 and 2.9?
Yep, that's historically where it's been, Rob, but it does seem to be kind of moving north.
Right. And it is going to move north. We know the reasons why. I can give you a couple of examples. There are older condo buildings where the limitation, the restriction on selling your unit with a penalty might be expiring. So therefore, those condominiums will be selling more, and they're going to be more north than the ones you've seen in the past. There are also the Attorney General's office. We're in touch. We know every condo that's going to be built in the next 3 years because the approval process is already in place. We follow that. So not only do we know when the expirations of the older condos are expiring as far as paying a penalty, that means there's going to be a influx of those units on the market. We know the new units coming. So we have at this office the ability to predict the future of the condo market, and we've done a really good job over the years. We'd like to give you more information on that. Feel free to comment or to just call us or email us, and we'll talk to you about your condominium or your desire to own one. All right, so thanks for watching us. In closing, I'd just like to say, 2020 sucked. 2021 was a huge return to the market. But during 2020, what we did as a firm is we honed down, and Gareth took research to a whole entire new level. We gut renovated our offices. We gut renovated the approach of how we sell real estate. We tackled the current, if you're aware of the current listings syndication and public website issues that are going on today that do not allow people, the buyers, to reach the listing agents of properties. We've tackled that and figured it out. As a small firm with a big reach, Harlem Lofts took advantage of this downtime and had a record stellar year. We're ready to help you next year. Again, look at the descriptions on how to reach us. Our social media is through the roof. We also took our downtime to take advantage of that. We are the firm to sell your property in Upper Manhattan. I'm confident. So reach out to us. Allow us to help you with your real estate portfolio in Upper Manhattan. And most of all, thanks for supporting this. It's been a lot of fun. Right, Gareth?
Yes, it has. Thank you very much.
Thanks a lot. Happy 2022.
Thank you.